that the industry is passing through will pass through very difficult times. Select sectors will pass through very difficult times, and I'm quite confident that government will go all the way, and the Reserve Bank of India will go all the way to ensure that whatever package which is necessary to revive the economy and and industries, it will come. We have to have some patience, because obviously there is a bandwidth issue at this point of time, even in the government, and this is how much they can do. So over the next 2 3 weeks, I'm quite confident that some kind of a fiscal package for the industry will
Endorse
also
the
come.
strategy what Prime Minister is currently adopting, which is survival first and revival later. It is important to save first lives, and then economy can come back later.
Yeah, I think it will go simultaneously, Nikunj, and what we are hearing and what we are listening. You will definitely have some kind of a partial lockdown lifted after 14th. Yesterday, I heard the UP's chief minister already said that they are planning to lift the lockdown. So hopefully, over the next few weeks, life should come back to normal. And I must say, most people, including me, underestimated the impact of this on financial markets and stock markets and in the industry. But hopefully, possibly we have seen whatever had to happen. Maybe we have passed through that, or we'll pass through that over the next 2 3 weeks, and hopefully, economy and markets will revive from here. And since I'm here, I cannot but talk about the markets also, maybe my two bits. As I said, let me acknowledge, in the beginning, we underestimated what coronavirus can do to the world and possibly also to India. So having said that, I think there are a lot of companies and industries which have essentially come to very, very attractive levels, Nikunj, and for a long-term investor, it is very really good time to selectively invest in a gradual manner in stocks and companies which you like, and keep that 3 to 5 year horizon in mind. And also, I would like to say that this is the time when one should not, just because itna sasta ho gaya hai, one should avoid leverage as much as possible, whether you are doing FNO or you are trying to do leverage investing by borrowing money. See, that is the biggest enemy for an investor. That you leverage, and if markets go down, then you suffer a big loss. So as long as it is your own money, I see very very compelling opportunities to invest. So I think if आप दान करोगे तो कुछ ना कुछ आपके पास जरूर आएगा.
So, Madhu, right? That's such a great point. So, Madhu, how would you think the market dynamics will change now? Because every time there has been a reboot, there has been a crisis, the shape of the market and the shape of the economy will change. How do you think investors who are genuine long-term investors who are looking at creating long-term wealth by investing in equities for next 5-10 years should really brace themselves? How can they prepare their portfolios for the new normal?
You have to have belief, Nikunj. This is, as I said, this is 1 in 100 year event. We all can curse ourselves for not being able to predict this, but it is very, very hard to predict. And it is very hard to predict that you can lose 40% in the index in less than 1.5 month. It is something like this. It is far worse than what we saw even in 2008. So I would humbly acknowledge that it was beyond me to predict this, that we will suffer, and we will suffer so much in such a short period of time. Having said this, as you said, we have seen it many times in the past, and we have come out of it. So the question is only, you have to have the longer term conviction that the companies which will do well over a period of time, their stock prices will come back. And if you are someone who was not invested or underinvested, maybe this is coming as a real opportunity for you.
So where do you think the bearishness in the market, Madhu, has been slightly overdone, and those stocks or those companies do not warrant that kind of selling?
So clearly, there is a lot of selling which has happened in financials, Nikunj, and understandably because they are the most leveraged. banks, NBFC, they are the companies which are most leveraged. And as I said, anyone who is leveraged, whether it is a promoter or a company, those are the stocks which have seen maximum amount of beating. But you please have all standard disclaimer that anything which I speak, people must consult their advisor. But I would say, which is what we spoke even the last time when we spoke. I see some kind of a leadership emerging very early days in the pharma sector, and if I have to put money now, definitely that is one sector wherein I will seriously consider putting money. Let me just give you some numbers, Nikunj, about the pharma sector because I track it very closely. So pharma used to be 1 lakh crore in 2009, and in 2014, the sector as a whole went to 10 lakh crores, and now we are close to 5 lakh crores. So basically, in the last 6 years, and mind you, no company in the pharma space has made either a quarterly or a yearly loss, no major company. So basically, it's been a significant derating in the entire sector as compared to what it was in 2014. 2014, clearly the valuations were a little on a little higher side, but considering that today, I think a lot of these stocks are available at a very attractive level. And needless to mention that a lot of these companies do not have a lot of leverage in their balance sheet. A lot of the promoters who run these companies do not have a lot of leverage. And in this environment, I think requirement of medicine logically will go up. So this is my most preferred sector right now.
Right. So, where do you think now, Madhu, the new leadership will emerge? Because last 10 years, the leadership belonged to financials. Before that, it belonged to consumers. Before that, it belonged to infra. Before that, it was TMT, technology, media, telecom, all the way. Where do you think the new seeds are being sown so that in the next cycle, one can really benefit from the harvest or from the blossoming?
Outside pharma, again, this will be men will get separated vis-a-vis boys, Nikunj. This is what we have seen in the past also. So you have to be able to find men in individual sector. And I'm not saying the opportunity is only there in the pharma sector. You will find opportunities selectively, maybe chemical sector. There are people who are making a case that certain amount of outsourcing will surely shift away from China to India. And in specialty chemicals, pharmaceutical, there are a lot of players who will benefit out of this. The other space which I'm very biased, Nikunj, is to look at real absolute deep value, because this is something which has been hated for last 4 5 years. The valuations have gone really really favorable. There is very attractive dividend yield in deep value stocks, and that ranges from something like an ITC to a lot of public sector companies. So there is a lot of deep value. You need to dig a little deeper, and you will find a lot of attractive stocks. So essentially, three things: deep value, where dividend yield is very high; second, pharmaceutical; and third, chemicals and specialty chemicals.
Right. Now, Madhu, the problem started with China, and thankfully, China has come back, and you cannot use the word normalcy, but yeah, Chinese economy is also limping back. All basic data points based on movement of activity, generation of electricity, pollution levels are indicating that Chinese economy is now back on the track. It will take some time before China will gain momentum. But if China is back, is there a serious case for metal stocks and metal related stocks to make a comeback?
I think whenever things bounce back, metal as a sector again will bounce back because so much money is being pumped in. I think $1 trillion has become a very understated amount now. The amount of money which China is pumping in the economy, the amount of money European countries have pumped, amount of money US is pumping, and amount of today only we saw stimulus being announced by Japan. There is so much money which is being pumped in, and this is all at zero interest rate. All of it is carrying zero interest rate virtually. So whenever this gets actually back into the economy, clearly metal sector will be one to watch for.
Right. So, Madhu, closing comments. Now, markets have fallen 40%. You said that no one has seen something like this. Is that largely could be attributed to the fact that the world is very mechanical, algorithm, and digital driven. Algorithms broke the back of the market, and markets in less than 40 days were down 40%. Do you think while we've been surprised, shocked, and scared on the way down, markets could be equally surprised and they could be delighted with the recovery up, because what algorithms have done to bring the markets down, when market stabilizes, those same algorithms will start working up.
Nico, you bring a very important point. I think a lot of the selling which happened, according to me, also happened by the ETF route, and also it was contributed by the fall in oil prices. So I would assume a lot of these sovereign funds which had invested money not only in India but across the world have would have had heavy redemption, considering that oil crashed from $60 to virtually $20 again in a matter of month. As you see some stability in oil prices improving, I also expect some amount of this FIA selling will also subside. So you will clearly have a bounce in the market once the FIA selling subsides, and once the fear of the virus subsides. Now, whether it will be absolutely V shape or U shape and how long will it sustain will clearly depend on a lot of factors. But for now, let us conclude that markets are attractively priced, and right now there is an opportunity to make investment on a selective basis. And we'll revisit this market maybe 15, 20 days later after seeing what is happening in the world vis-a-vis coronavirus, vis-a-vis oil prices, vis-a-vis the overall financial destability which will come because of what has happened, and then we'll take a subsequent call from
Thank you
there on.
very much, and on behalf of everyone from ET Now, thank you for helping ET Now and Times and initiative where we are appealing to everyone in the stock markets, in the financial services, that they should start. They should do their bit. They should donate, and they should generously donate, because if we are at war right now, all war needs a lot of ammunition. Financial markets have been blessed with what's happening to the economy, and stock market participants should come forward and contribute and do their bit in help to help the government fight this current war. Let's take a break. So far, news from the stock market is looking decent. No casualties so far. Reliance, banks, metal stocks, all of them are holding on very smartly and very beautifully.